Gold bars and jewelry prices in Vietnam surged sharply on October 30th, following a dramatic recovery in global gold markets, reversing steep losses from earlier in the week as the Federal Reserve cut interest rates and investors returned to precious metals amid economic uncertainty. SJC gold bars jumped to VND 148.1 million per tael for selling, marking a substantial VND 1.2 million increase from the morning session. The surge represents a remarkable turnaround after gold prices plummeted by nearly VND 4 million per tael just days earlier. Gold rings also participated in the rally, rising to VND 146.3 million per tael. The domestic price surge mirrored developments in international markets, where spot gold climbed back above $4,000 per ounce on October 29th, rising to $4,017.42 after 3 consecutive days of losses. The recovery gained momentum following the Federal Reserve's decision to cut interest rates by 25 basis points to a range of 3.75%–4.0%, marking the second rate reduction of 2025. Global gold had suffered a sharp correction from its record high of $4,181 per ounce reached on October 20th, falling more than 7.5% as investors took profits and trade tensions between the US and China appeared to ease. However, analysts described the recent buying as bargain hunting by investors who viewed the pullback as a purchasing opportunity. Peter Fertig, a senior analyst at Quantitative Commodity Research, explained that gold had lost more than 10% in recent times, making many investors see this as a good opportunity to buy. The expert noted that central banks may be taking advantage of the correction to bolster their gold reserves, a common pattern when precious metal prices cool. Vietnamese gold prices now trade at a significant premium to international levels, with SJC bars selling for approximately VND 20.7 million more per tael than the equivalent global price. This represents one of the largest gaps in recent trading sessions, reflecting strong domestic demand and supply constraints in the local market. The dramatic price swings highlight gold's heightened volatility as investors navigate conflicting economic signals. While the Fed's rate cuts typically benefit non-yielding assets like gold, improving US-China trade relations have reduced safe haven demand. Fed Chair Jerome Powell indicated that future rate cuts are far from certain, adding to market uncertainty.